companies under construction industry, which are Mohd Construction Co Berhad, Hoxenli Berhad, and also Gabungan AQRS Berhad. Construction is our choice because it is considered to be one of the main sources that contribute in the national economy and also country development. By this, we can try to see in more depth the financial performance of each company using three methods of analysis, which are common size analysis, index strength number, and also the financial ratios of the company.
Hoxenli is a well-established company that involved in the industry of construction, property development, and marine engineering. The company that was founded by the Yi family is based in Kuching, Sarawak, and known for its expertise in various fields. There are two highlights of company ongoing projects, which are the Pan Borneo Highway and Wastewater project that conducted in two places, which is in Kuching and Miri. As the accomplishment, there are three highlighted projects that the company achieved in current year, which are the completed construction in UiTM Muka, the Pananilarino Aquatic Center, and the completions of construction in SK Tudan Miri.
Gabungan AQRS Company. It was established in 2010. It is based in Petaling Jaya, Selangor, and the company operation and scope is involved in civil construction, building, property development, and related mechanical and electrical works. As for the example of current project for this company, it is such as Solitaire Suite, Teringan Central, and East Coast Rail Link for subgrade, drainage, and culvert work. While for the example for the complete project, this company has accomplished the Tropicana Metro Park, reconstruction of Pulau Air Hitam Daerah Cumpul, and Mass Rapid Transit KV MRT-V1.
Hi, I am Raihani and I will briefly explain the background of Mohd Construction Company Berhad. In 1960, Mohd Construction Company was co-founded by Mr. Loh Chi. This company was officially listed in the main market of Bursa Malaysia Securities Berhad on 25 February 1991. It has grown to become one of the largest companies in construction and related services in Malaysia. This company offers a wide variety of capabilities on construction, civil engineering, specialist intelligent building, trading, and other correlated services. In addition, Mohd Construction Company has accomplished various projects in both the private and public sectors. This company, for instance, has a significant engagement in national projects like the Petronas Twin Towers, National Sports Complex, Kuala Lumpur International Airport KLIA, Light Rail Transit System LRT, Malaysia-Singapore Second Crossing, and highways. I will explain the overall vertical analysis of these three companies. We can see that the number of total assets for Mohd Company indicates a steady growth from 2018 to 2020, year by year. However, the trend of the total asset for HSL Company and Gabungan AQRS Berhad declined from 2018 to 2019, then the trend rose sharply from 2019 to 2020. Despite showing an inconsistent trend, it can be concluded that HSL Company has the highest amount of the total asset compared to Mohd Company and Gabungan AQRS Company in average. As for the common size analysis, the three companies indeed are showing a varied result in which item has contributed the highest percentage in the total assets. Under current assets, for Mohd Company, the highest percentage is dominated by the amount due from the subsidiary companies, with more than 50% on average. And as for HSL Berhad and Gabungan AQRS Company, the trade and other receivables under current assets contribute the most percentage in this common size analysis. Growth in trade receivables may indicate that HSL Company and Gabungan AQRS Company sold more products and did not get payment for invoices immediately. This provides evidence that these companies are ineffective at collecting what they owed. Moreover, under non-current assets, all these three companies have one thing in common, which is the highest percentage contribute is from the investment in subsidiaries under non-current assets. Next, the amount of total equity and liabilities. For Mohd company, the trend is showing a steady growth from 2018 to 2020. However, for HSL company and Gabungan AQRS company, the trend is showing an upward and downward trend. For both companies, the amount of total equity and liabilities dropped gradually from the year 2018 to 2019, then slightly increased in 2020. As a matter of the common size of these three companies, they are showing different results in terms of total equity and liabilities. As for Mohd company and Gabungan AQRS company, the most significant percentage is contributed by the share capital of the companies. It indicates that Mohd company and Gabungan AQRS company have raised a lot of funds by issuing additional stock shares. Meanwhile, for the HSL company, the highest percentage under the total equity and liabilities is dominated by reserve. It shows that this company is well prepared to deal with any unfortunate situation that may arise in the future. This company has set aside a large sum of money to protect itself from short-term problems such as a decline in sales or an emergency expenses, and it allows the company to take advantage of opportunities as they appear.
For horizontal analysis based on the bar chart, we can see the comparative result between the Mohd Construction Company, HSL Company, and GBG AQRS Company from 2016 to 2020. We can see that HSL Company is the most stable as overall in financial management among the three companies. It is because the trend of the bar chart of the index number trend is in steady, consistent, and stable movement. Next, it also can be seen that the index number trend for HSL Company and Mohd Construction Company is declined in 2020 for all revenue, cost of goods sales COGS, total operating expenses, earning before interest and tax, and earning after tax. However, it is vice versa for GBG AQRS, which is inclined in 2020 except for COGS. For Mohd Construction Company, it can be concluded that the company always has the operating expenses higher than the revenue. It will affect the earnings before interest and tax and earning after tax of the company. So far, between HSL Company and Mohd Construction Company, HSL Company is more preferred. As for Gabungan AQRS Company, there is no index number trend for the cost of goods sales COGS and the revenue for 2016. Even though the index number trend for the revenues and the total operating expenses for the past 5 consecutive years seems not so good and can be doubted, but the trend of the index number trend for the earning before interest and tax and earning after tax is promising after shows an inclined trend for the past 3 consecutive years, which is from 2018 to 2020. As a summary, based on the data from horizontal analysis, the HSL company seems suitable to be invested in long term since it has stable, steady, and consistent movement of index number trend. For Gabungan AQRS company, it is suitable to be invested either in short term, intermediate, or long term since the trend value of the index number trend of earning before interest and tax and earning after tax is promising. While for Mohd company, if the company managed to decrease the total operating expenses, it will be a good choice to be invested since the risk will be minimized.
For the company analysis, there are 5 formulated ratios that we calculated. The first one is market ratio. For market ratio, if we compare to the price earnings ratio, we can see that all of the companies experience a declining for 5 years. But for HSL, we can see an increasing times value, which is by 6.6889 times from 2019 to 2020, different from GBG, AQRS and HOHAP that experienced a declining for the year of 2019 to 2020. As for the liquidity ratio, we can see that among companies, GBG, AQRS have shown an increasing by 0.4551 times from 2018 to 2019, but then declined by 0.276 times. Nevertheless, all of the companies are able to meet its short-term obligation. If we look at the net working capital, we can see that all of the company experience an uneven trend within the 5 years. But to compare from 2019 to 2020, HSL has shown an increasing number by 12,758,050 ringgit compared to the GBG AQRS that decreased by 7,461,644 ringgit, and the HOHAP decreased by 56,840,000.
For asset management, as all of the companies experience a declining trend within 5 years, only GBG AQRS showed an increasing from 2018 to 2020. We can say that the company has a higher potential in managing their asset and able to utilize efficiently compared to HOHAP and HSL. For capital structure, we can say that only GBG AQRS has shown a declining for both DAR and DAR compared to HOHAP and HSL, which we can conclude that the company has a higher potential in managing their long-term financial and able to manage their debt compared to HOHAP and HSL. Lastly, for profitability, only HOHAP has not shown any increasing. For HSL, the company has shown a steady increasing but then started to decline in 2020. For GBG AQRS, it has shown a steady increasing for 5 years, which we can conclude that the company has a higher potential of high return on investment and able to utilize their stockholders well compared to HOHAP and HSL.
Based on the analysis made on the financial statements of the company, we are able to analyze HOHAP company that has negative value of profits in the latest years of 2020. We suggest for HOHAP company to reduce the expenses in their operational costs. Furthermore, we have found out that the company has relying too much in their liabilities, and we suggest for the company to lower its percentage of its debts, as it will make the company to be riskier than the other companies. Due to this, the value of the debt to equity ratio is the highest compared to the previous year. The company should fully utilize its asset and share capital provided by the stockholders' equities, as well as to keep on issuing the additional shares for them to boost up the profits. Next, we look on the HSL company that are declining in their profits, and we suggest for the company to improve the efficiency on using its own resources. And it could be great if the company can efficiently and actively collecting their receivable. Lastly, for the analysis made on the GBG AQRS company, we can see that the liquidity assets owned by the company is lower, and we highly recommend it for the company to manage their receivable by ensuring the clients paying on time and invoicing them quickly as possible. Also, they can improve liquidity ratio performance by rising up the use of long-term financing, as it will help the company to gain inventory or finance projects.